Hey everyone, welcome back to Corporate Decoder, the place where we look at the numbers behind the headlines, and sometimes those numbers tell a story that makes you go, On today's episode, we are dissecting a filing from Unite Acquisition 2 Corp, and let me tell you, this one is a bit of a treasure hunt filled with financial maneuvers and strategic pivots that could be very interesting for investors who are paying attention. Before we dive in, make sure you are subscribed for more straight talk on corporate filings, especially if you like getting insights that others might miss and join our growing Discord community. Linked in the description below, it's a great place to discuss these deep dives. So what is Unite Acquisition 2 Corp? Well, they are what is known as a Special Purpose Acquisition Company, or SPAC. Essentially, they are formed to raise money through an initial public offering to acquire an existing company, and that brings us to what is happening in this filing. This report is all about a very important agreement that Unite Acquisition 2 Corp entered into on the 28th of October 2025. Essentially, they updated a promissory note, which is like an IOU, with a company called Lucius Partners Opportunity Fund LP. Now, the original IOU was set to mature, meaning it was due to be paid back on the 28th of October 2025. But thanks to this amendment, that due date has been pushed back a whole year to the 28th of October 26. Now, why would LPOF agree to wait another year to get their money back? Well, the company sweetened the deal by giving them a special right called a warrant. This warrant allows LPOF to buy 30,000 shares of Unite Acquisition 2 Corp. Stock at a very low price of just 1 cent per share. This is a pretty common strategy in the world of finance. When you need more time to fulfill an obligation, you might offer something extra to compensate the other party. So this amendment is essentially a renegotiation of their debt terms. Now, it is worth noting that Unite Acquisition 2 Corp has chosen to identify as an emerging growth company. This classification allows them certain flexibilities in complying with financial reporting standards. They have also elected not to use the extended transition period for complying with new or revised financial accounting standards, which means they are keeping up with the latest accounting rules. The filing also lists out the various exhibits that support this report. We have the warrant agreement itself and the first amendment to the promissory note. These are the core documents that lay out the details of this financial maneuver. Essentially, this filing is about extending a payment deadline and issuing a warrant as compensation. Looking at this filing from a higher level perspective, Unite Acquisition 2 Corp is clearly in a phase where they are managing their financial obligations and trying to secure more time perhaps to finalize an acquisition or improve their financial standing. The extension of the promissory note and the issuance of warrants are standard business practices when a company needs to navigate its financial roadmap. The fact that they are an emerging growth company means they are likely either a relatively new entity or one that has not yet reached certain revenue or market capitalization thresholds. This status can offer advantages, but also suggests they might still be in a growth or consolidation phase. The key takeaway here is that the company is actively managing its debt and equity structure, which is a positive sign of proactive financial management. For investors, this means keeping an eye on the company's future acquisition plans and the performance of its stock, especially considering the warrants that have been issued. The exercise of these warrants could dilute existing ownership, so it is something to watch. What is particularly interesting here is the context of SPACs. These entities are designed to go public and then find a target company to merge with. So this debt restructuring could be a step towards making the company a more attractive acquisition target, or it could be a way to bridge funding gaps while they pursue their search. The issuance of warrants at such a low exercise price of 1 cent is also noteworthy. It signifies a strong belief from the company that its stock will eventually trade at a much higher value. If Unite Acquisition 2 Corp successfully merges with a promising company, the holders of these warrants could see a significant return on their investment. So what does this all mean for Unite Acquisition 2 Corp? Well, on one hand, they have successfully renegotiated their debt, providing themselves with more runway. This suggests a degree of financial discipline and strategic planning. On the other hand, all of this maneuverings are part of the larger SPAC lifecycle. The ultimate success of Unite Acquisition 2 Corp will depend on its ability to find and merge with a strong operating company that can generate significant value. The risks here are inherent to the SPAC model if they fail to find a suitable merger partner, or if the post-merger company underperforms, then the initial investments and the value derived from these warrants could be jeopardized. The opportunity lies in the potential for a successful merger. If Unite Acquisition 2 Corp can identify and acquire a company with strong growth prospects, then the current financial adjustments might just be a stepping stone to significant future value creation. In conclusion, Unite Acquisition 2 Corp is making strategic moves to manage its financial obligations. The extended promissory note and issued warrants are tactical plays in the SPAC game. Their future success hinges on their ability to execute a compelling merger. For now, it is a case of watch and wait to see what target they bring to the public markets. Alright, that is our breakdown of Unite Acquisition 2 Corp's latest filing. What is your take on these financial maneuvers and what they signal for the company's future? Let me know in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord link in the description. We have a fantastic community there discussing these very topics. Thanks for watching. See you next time.